I'm sure you all have seen this many, many times before. I just want to reiterate, please, you are aware it can be a very risky business. Please don't ever use money that you cannot afford to lose. Okay, those of you who have been coming to the last few sessions will know that this series of webinars that David and I have put together, as basically we're going to be looking at obviously volume price analysis. But we're also going to be looking at the what we call the price cycle, the C states of the different sections of the price cycle, and how that all applies to the actual chart. And if this is your first time at this webinar, I'm not going to go through it in detail because it's, people who've been coming along will have heard it before. The best thing I can suggest is if you catch up on the recordings that we've done to date, go right back to the beginning and just listen to the first 10-15 minutes of it. You will get the background and in more details of what we actually mean, because ultimately, it's what we see on the chart that is going to be of use. The schematic that you see on your screen at the moment, for those of you who've not seen it, this is from the technical analysis module of our forex trading program, and it really does. It is a schematic. It actually happens to be Wyckoff's second law, but it really does encapsulate what we mean by a price cycle. Price is self-similar, so what you see on a monthly chart is replicated right down to a tick and a Renko chart, and it cycles. It goes through a period of if you look over here to the right hand side, we have accumulation, buying climax after a fall, before, if we move over to the right, it then starts to move higher again into what we call a distribution phase, a selling climax, and then it goes back down again. And so the whole thing is repeated, and it's, as I said, it's repeated in every time frame. Obviously, the difference is the speed with which it will cycle. So let me just go to the charts, and I will pass over to David, and then we will start.
Thanks, Darling, and good morning, good afternoon, good evening, wherever you are in the world. A very warm welcome, and lovely to have you with us today. It's drizzly and actually quite cold here today. We've had a bit of a heat wave in the last couple of months, so it's rather refreshing, to be honest. We've got our normal weather back. If this is your first visit, a very warm welcome to you. We primarily focus on, in terms of platforms, we focus on the MT5 platform, which you can see on your screen at the moment. It has a very similar look and feel about it to the MT4 platform. So if you're familiar with MT4, MT5 will be a very simple upgrade for you. And the two major differences on the MT5 platform are really the fact that you've got this huge array of timescales available, timeframes available, which you don't have on MT4. You can see them on the left of the screen there. You've got these times, you've got 1 minute, 2 minute, 3 minute, etc., etc. And they are options that you have on MT5, which of course you don't have on MT4. And the other big difference on MT5 is it is a true multi-asset platform. So if you're trading Forex, which of course it has, but if you want to move into other markets alongside that, or indeed just keep an eye on what is going on in related markets as part of the relational analysis aspect of trading, it's a fabulous platform because you'll find all the primary indices from around the world, not just the major US indices. You'll find the Australian, you'll find the Far East, you'll find UK indices, you'll find European indices. They're all there. You'll also find commodities, and you've also got a range of stocks. The stocks is not comprehensive, but it certainly gets you into the stock market in terms of trading individual stocks, if that is what you're looking to do. So it's a fantastic platform. You'll find it very much available now through a lot of brokers. 12 months ago, you wouldn't have found it so common. Now, increasingly, brokers are offering it because MetaQuotes have made some huge changes to the platform. It really, really is a fabulous platform. And as I'm sure many of you know, I know we've got some existing customers in the room, we have upgraded all the indicators which now run on MT4 are now available also on the MT5 platform. I've got the NinjaTrader platform running on my side. I'm going to pass back to Anna. We do flip-flop between the two. If you have any questions, just drop them in the chat box, or we'll try to answer them on there for you if they're longer questions. And we do have two dogs with us who are here all the time and occasionally join in which case we will switch off the microphones. For those of you who've come along regularly, you'll know exactly what we mean. I'll pass back to Anna, and we will get going.
Thank you. I did mention last week that we were going to look at non-time-based charts because we touched on support and resistance. Support and resistance is an integral part of volume price analysis, but it's also an integral part of technical analysis and of trading. But I just want to cover it a little bit in more detail this week because of several things that have been happening, particularly with regard to what's been going on the gold chart, and also for what we call seasonality, or this in this time of the year. Now, let's just go to the gold chart. Okay, let's have a look. Let's have a look here. If you follow my blog and if you follow the anything that I write that sometimes appears on investing.com, you'll know that I do write about gold quite a lot. It's something that David and I trade, so it's a market that we know very well. And it's also the analysis that I put up always seems to attract a lot of comment, and I have to say not all of it terribly flattering. And the reason is because I do the analysis, David and I look at the chart and we see what we see, and we make a decision, and then we write what we see. And the gold has been bearish for some considerable time. If you want to catch up with what we've actually said in terms of levels and what have you, the easiest thing is to just go over to my site and you'll be able to catch up. But essentially, it's the fact that we have been saying that it is hugely, hugely bearish, and it has been for some time. And in fact, if I pull up the weekly chart, and really, I'm going to have to scrunch this up quite a lot because you really need to understand this and also look at what we mean by support and resistance, and particularly with regard to multiple timeframes. Regardless of the time frame that you're looking to trade, and I appreciate most of the traders who come along to our sessions, and in fact most retail traders out there are focused on the shorter, the faster charts. You still have to look at the price cycle. Sorry, I'm just going to turn off for talking forex that I have in the background. Just bear with me a second because it's going to annoy me for a second. Hold on a minute. Right. That's it. Sorry about that. And the reason is, when we talk about support and resistance, what we actually mean is support and resistance at particular levels. Now, regardless of the kind of metric you use to measure support and resistance, whether you manually draw the lines on, whether you use an indicator, when you use one of our indicators, this is the one that comes with MT4, MT5, which is purely based on price. And as you can see here, the solid lines are denote areas of stronger has in this case support, and the hatch lines are slightly weaker. And the way the indicator works is the thicker the line, it obviously means price has visited, has been there more times than it has on the hatch line. So whether you use that, whether you draw these lines manually, whether you use a Fibonacci, doesn't matter. It's what you do with that information once it is presented on your screen. But to get back to what I was saying on the faster time frames, you have to be aware of the price cycle of what whatever it is you're looking to trade has done. This is the monthly chart, and the reason I've chosen gold is because in one of the posts there is a level, there is a psychological level with gold, and it is the $1,200 per ounce level that traders and investors are absolutely fixated upon. And the reason they're fixated upon it is because in the past it has actually bounced off that level. And in the last few weeks, it approached the 1200 level, and it did indeed bounce off. And this also brings into play this, that when we see support and resistance levels and these psychological or key levels, you have to be aware of what has happened in the past. But what you also have to detach yourself from is the view that a lot of traders take, and they say, right, well, I'm going to wait until it gets to the 1200 level, and then I'm going to buy. And because what that does, your brain kind of what your brain then tries to do, it only looks for those confirmation signals that will validate that opinion. And what I'm trying to say in a roundabout sort of way, support and resistance is hugely important. We have to be aware of these levels, and we have to look at the levels in terms of the slower time frames, because if price has paused at that level a number of times in the past, and you're trading down at the faster time frames, the chances are it will do so again. It doesn't mean it will change the overall sentiment, but if you are with gold, if we've been very bearish, but we knew every time it approached one of these levels, then it would pause, probably bounce before moving on. And the only way you can validate whether in fact it is a true reversal or a significant bounce, or it's simply a pause point, is where we use volume price analysis, because the only thing that will validate this price move is the volume, the activity, what is actually going on. So support and resistance, how you measure the metrics, whether you apply Fibonacci, whether you apply the lines yourself, whether you apply the indicator, or if you've got our package, we've got the Camarilla, which is also based on price action. Please be aware of the bias that can afflict you when a market gets to one of these psychological levels. So, having said all that, this is what gold is doing at the moment. It is still very, very bearish, which is ironic, really, because you would think the sentiment for gold, given what is going on in the broader market with emerging markets, etc., you would think everyone would be rushing to gold because things are, they're not looking terribly rosy at the moment. But it is certainly not behaving in the way that we would expect if you used sentiment as your reason for wanting to buy. So please be aware of that. It is something we are all prone to. You're not alone on this. And a lot of traders, if they use something like a Fibonacci, a Camarilla, or whatever, they will say, yeah, I'll wait until it gets there, and I will be, even if you say to yourself, I will be looking to buy, just be aware that your brain will then be looking for 29 reasons why you should buy, and possibly miss that it is not a buying opportunity. It may be a continuation of the previous trend, and this is where volume price analysis will help you to avoid the biases that our brains are very, very prone to. That's what I wanted to say about support and resistance. I just want to pass over to David, because there's actually quite an interesting there's a question from, was it Zena, about the Aussie, and she, again, when we looked at the price cycle, we saw congestion, a range, if you like, and we need to know, is it going to move out of that range? What is going to move a market out of congestion? What is going to be that driver? How is it going to, what is going to happen next? And obviously the indicators that we have developed really to help us in our analysis, and to try and keep our analysis neutral, trying to keep the analysis, if you like, objective, take an objective view of what is actually happening, and not be seduced by, well, yes, it has happened in the past. That information is there to tell us, is to put the what may happen into context, and simply be aware, but not to blindly say, right, as in gold, I'm going to buy because it's bounced off the 1200, regardless of what's on the chart. Because having told yourself that is what you will be looking for. You will be looking for those signals that validate your opinion. And as a trader, It's not your opinion, it's what is actually going on in the market at this particular time. What has happened is clearly important, but is what is happening now. Is there participation in this move higher, genuine participation, or is it just another trap move? And what my final words about price moves is the seasonality. At the moment, you may be finding on your charts and what you trade is there are a lot of fake moves, there's a lot of fake outs, and there's reasons for that. One of the reasons is that we are this time of the year of low liquidity, so we get a lot of price spikes, and when you get price spikes you get a lot of fake outs. But again, if you look at the volume and if you have the tick indicator, if I just move over to euro dollar and then I'll move over to David, the best way to have a look at it, if you look at the, say, the 8-hour chart here, if you look at this little line here is the kind of average. This is on the 8-hour chart. Now just move on to the hour. And you can see here, even at the times of good liquidity, the London session and this is yesterday's session, but you look here, the bars, they don't really go over the average, and that's simply telling us that it's just the time of year, and when you get low liquidity you get price spikes and you can get a lot of fake outs. That will die down as the traders get back to in sort of, it's really Labor Day and September when the market comes back to full participation. Right, I'm just going to pass over to David. I'm going to move my screen and see.
Should be able to see my screen. I'm just looking over on Anna's. Yep, that's fine. Just moved over to the NinjaTrader platform, and really just to pick up on Zena's question, which really goes to the heart of support and resistance, if you will. And it also, excuse me, just a minute. And it also, thanks, darling. And it also goes to the heart of, in many ways, the way we develop and design the indicators, because it's particularly relevant to support and resistance. What you're looking at here on the NinjaTrader platform is what we call the accumulation distribution indicator, which is based in much the same way. It looks at price. It looks at price levels in two ways. The reason that the dotted lines are different colors, we've got the red and the blue, and of course they are different thicknesses, is that these levels are ones which have either been tested from above or tested from below. If they're tested from above, then they're blue, they're acting as support. If they're tested from below, then they're acting as resistance. And the stronger the line, then the greater the number of times that region has been tested in that way. You probably can't see it up here, but this is a 5 test here. This is a 2, this is a 3, etc., etc. So it's a very visual way of describing the support and resistance regions on whatever time frame you are considering. And as you can see, they are very much contained within the price action. The same is true on MT4 and MT5, where the dynamic support and resistance indicator works in a very similar way, in that the levels up and down the chart, thanks, Danny, are very much within the price action, because that's where you want to see these levels described most clearly. And in addition to that, again, they are of two different thicknesses. So you'll find one which is a dotted line and then another which is a solid line, and they simply indicate either less strong or more strong regions of support and resistance. We don't differentiate between the two. When one level is broken, if it's broken from above, then what was support becomes resistance and vice versa. Now, I've got the Aussie dollar on here, but it could be any chart, it doesn't matter. But the Aussie dollar is an example. I've got this on 1 minute. And the way to view the levels is it then brings in the aspect of time, which is really fundamental to any trading. Whatever you do in trading, you have to look at it from a multi-time frame basis. For simplicity, we keep this very simple so that we have a single chart, which makes viewing much easier. Yet from a trading perspective, it's multi-screens, multi-time frames. Now, what that means in terms of searching for levels, particularly with regard to accumulation distribution or the support and resistance indicator, is we're on the 1 minute. If you want to, and the question goes to the heart of the whole issue, which is when the price action moves outside the range on your time frame, where do you find the other levels? And it's very simply a question of moving up to the different time frames. We're on 1 minute here. We can see we've got pretty strong resistance now overhead up here. And we've got a platform of support which is building down here, which is just about to be tested by the look of things. If we want to find out what's going on in other time frames, we just simply move up to the other time scales. Just move the chat box out of the way. Now we're up on the 5 minute time horizon, and as you would expect, it's a different layout, it's a different set of levels. We've got this very strong region down here where we had congestion. This was the news release that came out of Australia overnight. Big move and volatility, moved way outside the average true range, ton of volume coming in, as you can see here. And these were the two levels that had been building in that region up until that point. You can now see what is occurring here. We've got this very strong level building potentially here. We've got a platform of support below, which is being tested. It's been tested several times here and also over here, and more recently now also in the current time frame here. So we've got this very narrow channel, very strong ceiling of resistance overhead, less strong support below, and we've got the pivots up here defining the fact that we are in a congestion phase. Now, if we want to find out what's going on in a slower time frame for various levels further away from that, we simply just step up the time horizon. So we go to 15, let's go up to 30, and obviously you would have all these charts on at the same time. Here you can see we had a very strong area that was breached here. This was the news release, went straight through there, and it gives you a perspective going right the way back over here. We're over the 15th of August here and back into the 14th of August there. This very strong platform that was built here, and even a stronger level of resistance building overhead on this time horizon. And once that was breached, we then go through and on up to the next level. Let's go up to 60 minute. There we go, and that gives you another perspective entirely. Once again, we have the levels further out, so we've got relatively strong resistance up here. It was tested several times right back over here, which we're now back into, what, the 13th of August here. We've got this very strong platform here that acted as a support at this point and was then breached with this candle. It was then reversed back up to retest, 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 and we're back down into another level through that on down into a platform that was building here. Now we're coming back up the other way. Now we're moving into this very strong channel between this lower platform here and this upper ceiling here. And that really describes, if you will, the whole concept of support and resistance, certainly in terms of the way we've developed the indicators, in that they are designed to give you the most information within the current price action, because when all's said and done, what is the point in knowing where resistance is several days hence if the price action is so far below that or so far above it? It really doesn't give you much information. The information you want is within the current price action. So that is where you will find the predominance of levels designed and constantly drawing and rebuilding within the price action, because that's where you need to have it. And all you need to do to discover levels which are further away, maybe you want to find levels, you're looking at a particular trading opportunity. For example, we're on the 60-minute here. If you're trading the 60-minute time frame, then these two levels here are absolutely key, because once they're breached with volume, then what you're looking at from if this were to break to the downside, for example, with a close below this level, provided that is validated with volume and everything else stacks up, and you'd obviously be looking at all the other indicators, you'd be looking at the currency strength, you'd be looking at the array, the matrix, and everything else. Once that level is breached, and it's breached with volume, then the levels take on a different perspective, because what you'd be looking at then is this level, not so much in terms of support or resistance, but very much in terms of, first of all, what is the potential trading opportunity that I'm considering? So if we move through here, then potentially this is where the market is at the very least going to pause, because we know we've got a very strong potential platform of support in place. So it then becomes a question of, first of all, the profit potential from that opportunity that you're considering. This is not risk and reward. This is not these crazy 2 to 1, 3 to 1. I'm not taking a trade if it's not offering me a 3 to 1. You know, none of that nonsense. This is about what the chart is telling you, because when all's said and done, the market will tell you where it is likely to go to and what is the potential for the opportunity you're considering, which is another key aspect of support and resistance. So in this example, if we're looking at this as a shorting possibility, if it does breach and hold below that, then the potential is that the market will at least get to this level. It's very strong potential support, nothing else. We don't know if the market's going to stop here or just go straight through, but it certainly gives us an idea of where this market might travel to in relatively free space between the two. And of course, to the opposite side of that, then you would be looking for potential placement of your stop. And again, you can look at these levels as potential areas to place them above. If it fits your risk and money management rules, you might be looking at this level. We've got a lot of protection in here, so you know that wouldn't be a bad place to position a stop, because if the market does reverse and rally against it, we know at the very least we've got some decent potential protection in place should the market reverse in the short term before turning in our direction. So you use support and resistance in many, many different ways. And that really is how to consider the support and resistance. You're constantly looking up and down the time frames. You're trading on a particular time frame, but you want to know what's going on downstream and you want to know what's going on upstream as well. Okay, I'm just going to pass back to Anna because she's got the Aussie Renko on the MT5.
I hope you can all see the screen. I'm just looking over to David. Yeah, this would be a very typical workspace if you've got the MT4 or MT5 version of the indicators. If you've got MT4 and you haven't looked at MT5, I really do urge you to try and port the indicators over to MT5. As I said, for lots of different reasons, not least the Renko works in a slightly different way, and as I said, you've got these multiple timeframes. Now the question was really the congestion that the Aussie dollar has been in or until the London Open. But if we expand the chart out, this is the 3-minute chart. In fact, if I go to the 30 minutes, it's probably easier. You can see here this huge candle here. There was Aussie news, so you have to see this price action in the context of what has happened before, and it's this is what I've said earlier. At the moment, volatility, price spikes. Lots of different reasons. I mean, there are the traditional drivers of for this market, which is fundamental news. At the moment, that seems to be taking second place to a political goings on, Donald's tweeting, and we forget that actually the principal drivers for certainly for markets is fundamental news. So this is what happened overnight for us. So after you have volatility, what tends to happen, the result is the market quietens and it goes into a congestion phase. Now this is the 3-minute chart, which I assume is the congestion that Zena maybe was referring to. Here we have the volume point of control. The volume point of control is again an indicator that we developed to help us with volume, price and time, because the most important phases of price action on a chart are actually congestion phases, either congestion ahead of news, congestion at distribution, a congestion at accumulation. It's where price moves away from, and this is what I said about fake outs, breakouts, breakaways. Now you will have read that breakaway, breakouts, they get a bad press because of the issue of fake outs and breakouts. But you know, if you understand the price cycle, if you understand especially how to use the volume aspect of what is happening on the chart, it should not be a major issue for you at all. Now, if we look back, this is the 3-minute chart, and this is the congestion. This is the volatility that we had. It went up a little bit, it carried on a little bit higher. We had a little bit of a pullback. We had more volatility here before it actually, with volatility, when these indicator is triggered, these two little purple dots here, or two little purple arrows, you tend to find price will retreat to within the spread of the price action. It sort of did it here, but not quite as cleanly as it did on this candle. We had the first volatility here, then and with volatility you get momentum. This is what a lot of traders try to capture, and it is possible to capture. They try and trade ahead of the news, which is fine. You know, you can, if you understand what you're doing, there's absolutely nothing wrong with that, or you wait for it to fade. Generally speaking, most traders tend to wait. So we had these two volatility, and then we've had this, what I call this kind of washing line. We've got our levels very clearly marked, but because we've got the volume point of control here, and the shading behind the indicators is telling us that the price has remained in this range. It's transacted volume. The market has decided it's had its burst of activity. Traders, and you know, they don't want to the forces that move this market, they don't want to push it anymore one way or another. So it's quite happy to transact and rotate along around the VPOC. Whenever price is at the VPOC, particularly in multiple timeframes, in more than one time frame, going back to gold, the gold price has been rotating before the breakdown of the price. It's the VPOC is in the same place on the monthly chart, I think on the weekly chart, isn't it, David? 1300, the 1300. So that's telling you that this is a very, very strong region, so that, you know, if price ever goes back there, it's going to need an awful lot of volume to actually get back through it. So what it does, it acts like a sort of like a weight on it to push the price down. Now, what we also have on this chart, we have our Camarilla levels, and there's a protocol to Camarilla, the R4 level here that we see here. If price goes below, breaks below, stays below, the chances are it is going to carry on lower. Now, if you use that in conjunction with the VPOC, if you've noticed here, this shading at the back of the volume point of control here, the shading goes all the way across. That tells you that price has been in a range. It's been, you know, traders have been transacting quite happily, you know, in this price range. When price reaches one of these low volume nodes, if it gets there, that's when you're going to get momentum. There's nothing to hold that price. Where's it going to go to? Well, you've got the R4, you've got, what have I got there? How come I've got, I don't know, I seem to have And when we look at the chart and we see what's happening with the VPOC, the benchmark chart that I use with the 3-minute chart, sometimes I look at the 30-minute, sometimes I look at the 1-hour chart. And the 1-hour chart is interesting because I have the VPOC on the 1-hour chart as well. So the price is acting in the same, it's in the same region, as it were, with this particular support and resistance indicator. But this support and resistance indicator, the VPOC, also has the element of volume in its algorithm. And with the indicators, I've got the 8-hour chart as well, which is the 3 sessions, and we can see here, this is what happened in Asia, that it actually moves over at 6 o'clock London time. It's 8 o'clock, it's 2 hours faster than local time for me. And you can see here, we've had this huge up candle, but not a huge, not a massive volume compared to that candle and that volume and that candle and that volume. So having had that dramatic move higher that we saw on the 3-minute chart, what are we seeing here? Well, the likelihood is it is going to have at least some kind of pullback. Now, in the context of this dramatic move lower, are we seeing here a reversal, or are we seeing a bounce higher from this region here? Everything, the dollar has gone absolutely ballistic lately. So is this just simply a tradable bounce, as it were, before that trend lower resumes? We will have to see what happens today and in the US session. And of course, the indicator that if you've got the package, the one indicator that will help you determine that is obviously the CSI, because what the currency strength indicator reveals to you is when a price has reached an oversold and overbought, has hit a resistance, has hit a support, and is it highlighting a potential trade. So you know about support and resistance, what it's telling you on the chart, then you have to decide whether the information that is on the chart, from the price action, from the volume, from the indicators, is it possible for you to take a trade or not? And as I said last week we were going to look at non-time-based charts, particularly when you're in a price cycle, part of the price cycle that is in heavy congestion, and you're on the faster time frames. This is when you have to look to combine your time-based charts with the non-time-based charts, and this is why we've developed the Renko indicator, because what Renko does, not only does it show you the price cycle in stripped clean of all the noise, if you like. You've got no wicks to the candles, all you see is price, and this is set at every one of those bricks is a 2-pip move, so it really does pick out the congestion phases very well. But what it also does, it highlights the support and resistance regions and will help you to decide if in fact there is a trade likely, is there a potential trade setting up? But you use that with the CSI, with what the time charts are telling you, but you start with the analysis of the price cycle. What is the shape of the chart? What is the price doing at this particular moment? And then you can decide, well, if it's in congestion, is it going to pull away? And if it's going to pull away, how far it's going to go? Is it going to hit a VPOC maybe on a slower time frame? That's going to hold it up. That's what you're looking at all the time. I'll pass back to David.
Thanks, darling. We're back on NinjaTrader. Should be coming up anytime now. Hopefully you can see my screen. Is that okay, then? Absolutely. Yeah, good. We're back to, this is the Aussie dollar, still on the 60-minute chart, same chart as you were looking at before. And you can see here we're still hovering around this potential platform. It's always a potential platform. It's not guaranteed. These are not brick walls, if you will. They're not concrete. It doesn't mean that it is going to support it. It just means it's a potential area of either support or resistance. And for any move away from this congestion phase, then you want to see a close beyond that particular platform. And the question we always get asked is, well, how far is that? There's no answer to that, because it's all a question of judgment. Yes, of course, you will find occasions when a price action will breach a level, it'll close above or below it, and then the market will promptly reverse back inside. It happens. If you're a reversal trader, it's one of the reasons that you have to allow for more risk on the table, because your stop loss will be that much wider to accommodate the fact that the market is oscillating around a congestion phase. For example, if you're considering taking this as a reversal opportunity, then the payback to you is you're going to get in early, because if this does develop into a decent trend, then you are in that trend earlier than everybody else, and people who are trend trading and jumping on a trend that's already started get in later. The payback, if you will, for them is they don't have to put so much risk on the table in terms of stop loss position. And that's always the judgment that you have to make. If we go to just hopping over to this is the CSI, I've got this on 30-minute, because levels also apply to the forex market in so many different ways, particularly because it is a market of mean reversion. It's one where currencies are constantly oscillating from strong to weak and back again. I've got this on 30. You can see here the Aussie dollar is the blue line. We've had this pretty bullish rise up here. It's now starting to curl. The levels here, 80 and 20, they're not signals of getting in and getting out. They're just indicative of where a currency is potentially overbought at the top or potentially oversold at the bottom. This is the euro. You can see here we've had a lot of buying of the euro. Now as we move into London session, which is now 20-30 minutes underway, we're seeing some pretty strong selling of the euro. Equally, we've now got buying of the yen coming in. This line here, this was previously selling of the yen. We're now seeing buying of the yen coming into the market. And this is the dollar, the red line. And that is why we're starting to see this pause in the Aussie dollar on this slower time frame, because we're starting to see some potential selling coming in, and we've got potential strong buying coming in on the dollar. And if that develops, and that will develop into a nice trend, and we will see the Aussie dollar move quite strongly.
Can I just talk about dollar? Can I just say something?
Yeah, just going to pass over to Anna. Hold on a minute.
Right, it's just to answer this Zena's question about the Turkish lira and Turkey, and this as this unusual event. Okay, the issue with Turkey, as with all emerging markets, is not unusual, and it's something that's been bubbling in the background, and it's really connected to what is happening to the dollar, and particularly the Fed's policy of raising interest rates. And what it actually boils down, forget the tit for tat with tariffs, etc., and it really highlights, if you like, the fundamental aspect of trading, and that is, as a trader, we all start with technical analysis, and we look at support and resistance levels, and we analyze our charts, and we use our indicators, and we look at setups, you know, on the faster time frames, on the medium and the slower. Regardless of, you know, what chart we want to trade, we analyze the chart, we say, yep, that's the setup, and away we go. And suddenly the whole thing is upended for, as I said, either fundamental reasons, geopolitical reasons, you know, or Donald Trump or whatever. But the issue with Turkey is this, and it is Turkey is part of the emerging markets. India currencies such as the Indian rupee. You've got Argentina. You've got, you know, that are not mainstream. They're not the main G10 currencies. What is happening? What happens with emerging markets? And we had a crisis with emerging markets back in, is it in the 90s, David? Was it the Thai baht and what have you? What has been happening? The context to that is the extraordinary low interest rates that the world has been awash with, and the money that's been available to borrow at these low interest rates. And what they do, these countries, they have loans in foreign currency because it's cheaper to borrow money, to borrow dollars and also euros. What then happens is, once the Fed in particular has now started to raise interest rates and to tighten, and has withdrawn from QE, so there's not so much money around, these loans have to be serviced. It's no different if you borrow for a mortgage, and you're quoted you're quoted a variable interest rate, and then as interest rates start rising, you've then got to pay back those loans, and that is what can cause a crisis for emerging markets, because having taken advantage of cheap dollars, now that the cost of that of those loans is rising, that's when they have a problem. They've got to service those loans. They have their reserves, and countries will use their reserves, you know, to keep the repayments going, and hope that the cycle then turns, and you know, things get back to a more favourable interest rate environment. And what you also have to know from a fundamental perspective as well, and it's what we cover in the forex program in great detail, is you'll read in the press that the Hong Kong, the board, they have a currency board, don't they, David? They have something called a currency board. They have gone out and bought billions of Hong Kong dollars because they don't want, you know, they're trying to keep the exchange rate within a certain range, which is why some pairs, it's really, personally speaking, I can't see the point in trying to trade, because it's not a free floating currency. The currency board in Hong Kong, they like to keep a definitive floor and ceiling. We don't know what it is. We can sort of, they never tell you what it is, but the fact is that they've gone in and tried to, you know, push the exchange rate back into a range. That tells you all you need to know. That it's a managed, it's a pegged currency to the dollar. So it's really more about the dollar than you know, what may or may not be happening in Turkey. And as I said, to do with emerging markets, it's something that's been bubbling along. You know, it's always going to happen if the Fed continue to tighten interest rates. Now, if they stop, that will take the sting out of it. But if they are determined to carry on normalizing, in inverted commas, their monetary policy, then we're going to find more and more of these. With it's Turkey today, it could be, you know, one of the other emerging markets, you know, later down the line. That's all. Right, Zane? I've answered Michelle about volume.
Fantastic. Thanks, Simon. Very quickly, what the CSI is also telling you right now, and it's loud and clear, we've been looking at the Aussie dollar, but if you were going to be trading any particular currency right now, the one you'd be going straight to is, amongst many, would be the euro dollar, because the euro is falling strongly and the dollar's rising strongly. And I don't even need to look at a chart. I can just look at the CSI and it tells me instantly what is going on. Very strong trend will be developing on euro dollar right now on this slower time frame. And I'd be up and down the time frames on the CSI and the charts as well, looking for those opportunities. But I can tell you now, that is what's happening. It's just such a great indicator because it tells you instantly where to look, where to hunt. You know, the Aussie here is flatlining a little bit. It's gone into its shell again. You know, it's going sideways. Yes, the dollar's rising, but that's not going to develop a strong trend on the chart. That's why you're seeing some congestion building there. On the euro dollar, you've got strong trend developing. And equally, you can match the euro with the Canadian dollar. You can see how heavily oversold the Canadian dollar's been, really beaten down. It's starting to regain some momentum to the upside here. And equally, the same is true of the yen. The magenta line below it. So you've got the purple and the magenta rising quite strongly along with the dollar, and the euro falling quite strongly. You've got the pound here falling as well, and you've got the Swiss franc. Very quickly, just run through some of the other aspects you would look at. You'd look at the array. If we just highlight, I've got the yen highlighted, isolated out, but let's just isolate out the dollar for a moment and just see what's going on there. And what that tells you is that certainly, as you can see here, we're on 5 minutes, so we're on a pretty fast time frame, but certainly you can see down here the euro dollar, you know, that's selling off pretty heavily. The cable too looks as though it's joining it. You can see it hopping around here on the ranking ladder. And the dollar Swiss is up at the top, so we've got strong buying of the dollar up there, and looks though the dollar yen is moving up there as well. So the flow of dollar is pretty much, it's starting to build into a pattern on the array. You'd be looking at it on the currency matrix. Again, I've got this isolated out on the yen, but you could do the same thing on the dollar. Now, if you move over onto the heat map is a very different animal. It looks at a much slower perspective across the entire matrix of pairs in all the various time frames. Now, on Ninja, we've got it from 1 minute through to the month. And on the ranking ladder down here, this is ranking them on a much slower perspective, because what the heat map does is you can see the bullish and bearish aspect across the time horizons purely through the red or green colors on the various time cells. But then, of course, what you appreciate, and it's common sense really, is that if a currency is very bearish on a slower time frame, on a daily or a weekly or a monthly, as indeed here, then that should carry more weight. And that is the reason that this ranking ladder here moves more slowly. These currency pairs will move up and down here, certainly intraday, but they're not going to hop several spaces as you would see on the currency matrix. So this is much more to do with slower time frames. If you're much more of a longer term trend trader, you're looking for those opportunities, or perhaps you're looking for reversals on slower time frames, and this is the place to look. The New Zealand dollar has been beaten and hammered to death for many different reasons, technically, but also because of the very dovish comments that have come out of the RBNZ, and hence you're seeing these currency, certainly the New Zealand related pairs, anyway, certainly in the yen and the dollar, are down at the bottom here. You can see how bearish it is across the time horizon. Equally up at the top here, you can see we've got the dollar CAD, very bullish, lots of dollar buying, etc., etc. And that is the ranking ladder. Now you might look at it in terms of reversals. You might say, well, okay, I've got these New Zealand pairs down here, very, very bearish. At some point they will reverse, and that is where you really come back to this whole business of the cycle of accumulation and distribution and support and resistance, because it is all interrelated. And whether you're looking at it on a 1 minute chart or whether you're looking at it on a 1 month chart, it all works in exactly the same way, because price action is all self-similar. It's wheels within wheels, it's Russian dolls. I can think of lots of analogies, but those are, the Russian doll analogy is really where you've got this tiny little Russian doll in the middle and you come all the way out to this large doll on the outside. That is pretty much the way to think of price action. And of course, across the time horizons, a currency pair will be bullish in one and bearish in another. We have to live with this fact. It's a fact of life, which is why it's so important that you focus in on whatever time frame you are trading for that particular opportunity. Just moving over to Renko, I know we touched, Anna's touched on non-time based charts, but just to show you, support and resistance works in exactly the same way. This is a non-time based chart. We've got the Camarilla levels here. This is on gold. I've got this on 15-minute, and through to the VPOC on the daily chart for the YM. This is an index, a future. And what the volume point of control does, it looks at support and resistance through the prism of volume. So when you're looking at the histogram here, this is the volume concentration levels at the various price points. And that is an alternative way of looking at support and resistance. And I'll cover that in probably in more detail in the later session to come. Finally, just down onto the indices, just see what's going on. This is the euro. Sorry, I beg your pardon. That is the dollar index. This is the euro index. This is the selling in the euro, what we're seeing at the moment. This is on a 5-minute time horizon. And just to make the point finally about support and resistance, you can eyeball it. You know, you can look down here at a price chart and say, okay, we've got a pretty long, pretty strong support platform building here. It's been tested, hasn't breached, and then we've cleared it. You can look at this level up here and say, yeah, we're building a ceiling of resistance up here. We've tested it 3 times, hasn't got through, etc., etc. So you can look at support and resistance. You can eyeball it. You don't have to have all the indicators. What the indicators do is give you not only those levels, but they also give you the strength of those levels. How strong is that level? Is it, has it been tested several times or not? And that is true on both the Ninja and also the MT5 platform. I'm going to pass back to Anna just to wrap up.
And just to, as we looked at the Aussie dollar, but David highlighted the euro dollar, and I just want to, first of all, this was a little move that was captured. We were looking at on the Renko. We've got the trend monitor also turned red. The trend dots turned first, and this is that little move that that was picked up by the CSI. It's come to an end, and it's going into into congestion. It's the support and resistance. The other thing I'd like to say about support and resistance is you do have to be you have to give these levels a little bit of breathing space, because price can sometimes overshoot. It's never, it's not a sort of bang on, as it were. And well, no, I'm saying yes, our indicators are. We've tried to. We have. They are just down to, down to a sort of a very precise level. But generally speaking, when we talk about areas or zones, if you like, with ranges, you have to, excuse me, which is why when we do the analysis, we always say, in the price zone, when we're talking about $1,200 per ounce for gold, it could be 1201 or 1202. But this is the little move lower. This is what we're seeing on the 3-minute chart. This is this congestion phase. This was this move lower. But we can see here the volume is not what you would expect. This is the average line. We are in a session that there are a lot of traders, not as many as obviously when New York comes on board, but it's just something to be aware of. We're very, we have very clear lines, if you like, that this price has to either go above or below if it is going to either reverse or continue. Now, is it going to reverse or is it continue? I've actually highlighted, this is the 1 hour CSI, and we can see here the dollar is actually turning up. This is on the hour, and the euro is turning down. And I've got the 1 hour chart here as well. And we have the VPOC. What it's trying to do is break away from the VPOC. The previous hourly chart, there's quite a decent amount of volume under that. We've got another 15 minutes to go for this chart to kick over. That isn't very encouraging. There has been, if you expected that to carry on lower, you'd want to see now whether that's, the volume increase, whether that's going to increase in the last 15 minutes, we will have to wait and see. But what is also telling us, because we have the volume point of control, it simply means it is going to stay within this range. It's not going to be a strong move higher or lower until it moves away from the volume point of control that we have here on the hourly chart, and it's replicated. This was the move lower. We did have a clean breakaway from the VPOC on the 3-minute chart, and it's reflected, as we see here. This is the congestion that we're seeing here at the moment. Whether that carries on lower, sitting through congestion phases is probably the hardest thing that you have to do as a trader, especially if you've got, you're in a move, you've got some pips, you've moved your stop, and you sit there and you think, gosh, is this going to carry on, or is this actually going to reverse? That is really, really difficult. But if you understand the price cycle and you understand support and resistance, and you've got some indicators that will, give you the narrative of what is going on the chart that you're watching, you should be able to, simply take that emotion away and just sit and wait. And with the trailing stop, you sit, and if it doesn't, you either let the market take you out, or when it starts to move again, you can scale into a position. Right, I think that's all I was going to say on the charts. Just very quickly, those of you who haven't been before, the indicators that we use are from Quantum Trading. You can buy one, you can buy a complete bundle, we bundle them up, or you can buy a the complete package. You only pay once, it's a lifetime ownership, and you never pay any more. We have the way we work with Quantum Trading is we develop the package. If you buy the package, when we develop new indicators, upgrades, they are added to your package. You never pay us anymore. So if you start with 1 or 2 and you have 2 or 3, and then you say, oh, I think I want to upgrade to the full package, obviously you will be credited. 24/7 support, 365 days of the year, and you can transfer from platform to platform. So if you're in MT4, you want to go to MT5, that's fine. If you want to go to NinjaTrader, there is a slight price difference, because NinjaTrader, they have 1 or 2 more indicators, and we will go through them in the next session in more detail when we come look at the American market. As I said, if you invest in the full package, you receive all future indicators we develop for free, and you can credit and a credit for anything that you may have bought. And also, if you decide to invest in the education course, the forex program, and you've bought indicators or you bought the package, of course, you'll have a full credit for that as well. And we also offer a discount on second licenses. We have traders who have MT5 on one platform, and then they like NinjaTrader, and they buy some NinjaTrader indicators and make it 50% off the price. You can find all details of the education at quantumtradingeducation.com. It is a really full comprehensive program. It's technical analysis, as I said earlier, fundamental relational analysis, the mechanics of trading, and the psychology of trading. And it's got all the indicators. There's 50 hours of video podcasts, and 13 PDF downloads. And Trader Chatter. Yes, we have a trader group called Trader Chatter on a management, what do you call it? Project management program called River. We did have to move to Facebook, and really horrible Facebook. So we've gone back to River, and that's, you can post up your trades, you can post questions, whatever, and we're really pleased about that. So, David, anything you want to say, or is that it? Yeah, I think I've covered everything. Thank you so much for coming along. I hope you've enjoyed what we've covered today. If you've got any questions about anything, then just please feel free to drop me an email. It's anna@annacooling.com. I'm more than happy to answer your question. If you've got any questions about the indicators, whether you're a customer or you're thinking about them, you can either email myself or helpdesk@quantumtrading.com. Jonathan there will be able to help you out and give you all the information you need. If you're not coming along later on, have a great trading day, and we'll catch you next time. But next week we are back at what time is it? 7 o'clock? 7 o'clock. Yes. Well, the email will come out from GoToWebinar. So thank you, Melanie. Yes, I just worked out CSI maps individual. Oh, don't worry, Zena. Listen, this is not easy. If this was easy, everyone who traded would be multi-millionaires. Please don't ever, don't worry. The thing, this promise, the last thing I'm going to say, what David and I get really upset about is the fact that the marketing in this industry gives the impression that this is easy, because all you're being asked to decide is whether something going up or down, and place a trade. I can assure you it is not easy. It's one of the most difficult things that you will have to try and master. And what makes it worse is because it seems very easy, but it isn't. So anyway, so please take heart from that. Thank you so much for coming along, and we'll catch you next time. Take care.